In this video, I want to highlight reasons why you should consider penny stocks in your portfolio. In other words, the advantages, the benefits of investing in penny stocks. Here are some key potential advantages of investing in penny stocks. I want to look at them one by one. Number one here is low entry cost. Low entry cost. Penny stocks are inexpensive because they sell at less than $5 per share, allowing investors to buy a large number of shares with a relatively small investment capital. You can buy a large volume, you can buy a huge volume of shares of penny stock with a relatively little amount of capital as an investor. That's not attainable if you want to invest in large caps or mega caps stocks. Number two, high growth potential. Some penny stocks have the potential for substantial gains if the underlying company grows or become financially successful. Usually, these are stocks of newly established companies. And if the company gets established, over a period of time, if the fundamental becomes more and more solid, then they start higher potential for growth. Some of the stocks we are seeing in the market today started as penny stocks, and today they are highly established large cap companies in some instance. And so it's always that high potential for investment growth. Number three, opportunity for early investments. Opportunity for early investment. Investing in penny stocks can provide opportunities to get in early on companies that may become successful in the future. Usually, some companies start small. So if you can invest at that early stage, when it becomes successful, that means you had an opportunity of investing early when the company was just newly introduced into the market, newly listed in the market. And so it guarantees you an opportunity of doing what? Of keying into an investment that will do or perform very well in the future. Number four, diversification. The low cost of penny stocks allow investors to diversify their portfolios by adding many different stocks without significant investments. Now, it goes back to what? To the fact that these stocks are very cheap. They are selling at a very cheap prices. So you can very easily diversify across sectors and across industries simply buying penny stocks. You will accumulate a large amount of these stocks in different sectors and in different industries and even in different countries. Because they are very cheap, you can buy high volume, high amount, high quantity with your little capital. You don't even need to buy fractional share because they're not even big enough to go fractional. So you can buy a sizable quantity because they are very cheap. And by so doing, you are diversifying your investment across sectors and industries and even region. Number five, potential for big returns. Due to their low prices, even small increase in the stock price can lead to significant percentage gain. Let's say a stock selling at $5. If that stock climbs to, let's say, $6, that's a little percentage gain. You have a dollar each in price, as gain. If you buy stock at $50 and the stock climbs to $55, that percentage gain isn't as much as what is obtainable with a small cap stock. So a little increase in penny stocks will then guarantee you a larger percentage gain. That's the nature of penny stock investment. There's obviously potential for big returns compared to larger companies with pricey stocks. Number 6, market efficiency. Less competition in penny stocks can sometimes mean that undervalued opportunities are more accessible to individual investors. This is a very important advantage of penny stock investment. These penny stocks generally are neglected by institutional investors. They are ignored by investors with a sizable level of capital. And because of the fact that they are neglected and ignored, the stock price tends to be undervalued. And when you key into that undervalued opportunities, at the end of it all, when the stock price rises, you discover that you make substantial gain. All right. And so you benefit from what? From the market's efficiency that will eventually catch up with these penny stocks, and then people will get to acknowledge them and they will key into the stock price will rise, you will benefit as a result. Number 7, potential for acquisition. Penny stocks may be acquired by large companies, leading to substantial gains for early investors. If a penny stock is doing very well, there's a likelihood that bigger companies will buy the entire company, will them either match or acquire a smaller company. And once that is done, you discover that the stock price of the company being acquired will do what? Will then rise tremendously. You get to benefit from what? From potential acquisition by a larger firm. Number 8, high trading volume. High trading volume. Some penny stocks experience high trading volumes, providing liquidity and making it easier to buy or sell shares. Not all penny stocks have limited or smaller share outstanding. Some of them have a larger amount of shares out there. And so when these shares are purchased, at a higher volume, we discover that the stock price will rise accordingly. And not only that, there's always a provision for what? For liquidity. You can very easily buy and you can very easily sell. They have that liquidity tied to them. In some instances, not in all instances, but in some cases, they can be highly liquid. But most of the times, they're not highly liquid. But sometimes they have liquidity because of what? Because of the high trading volume they provide. Please subscribe to this channel. It will do me a tons of good. Not only that, you click the like button, give me a thumbs up. Number 9, growth and innovation. Innovation and growth. Penny stocks often belong to smaller, innovative companies with new technologies or business models, offering exposure to cutting-edge sectors. Some of these penny stocks, generally, in some cases, they come with innovative technologies. They come with innovative product offerings. They come with, creative business models. And all things being equal, if they succeed, you will experience that, high level of growth that accompanies the innovation they are bringing into the market. If the market accepts that innovation, the stock will grow tremendously. Number 10, flexibility. Flexibility. The low cost of penny stocks allows investors to experience or to experiment with different strategies or sectors without committing a large amount of capital. Because these stocks are cheap, they don't really cost you much. With a little amount of capital, you can experiment in them. You can buy from different sectors, sell from different sectors, experimenting, with these stocks with the aim of seeing or having a certainty of which particular model or strategy will work for you. You can afford to experiment with them. You can't do that with mega cap stocks because the prices are very, very high. You cannot do that. So they are quite flexible. These are, important advantages why or reasons why you should invest in penny stocks.